Dear students, we welcome you to our classes conducted by our YouTube channel SL Account School. Today's topic is cash flow statements. Let's look at some bullet points. A cash flow statement summarizes the amount of cash and cash equivalents entering and leaving a company. It highlights the company's cash management, including how well it generates cash. This financial statement complements the balance sheet and the income statement. The main components of the statement are cash from three areas, namely operating activities, investing activities, and financing activities. Usually, these are done in two different methods. One is indirect method, other one is direct method. Operating activities of CFS begins with net earnings, treating all incomes as inflow and all expenses as outflow. In this, some non-cash expenses like depreciation, provision for bad debts, etc. may be included, so those will have to be added back. The second section of the CFS records the gains and losses due to investments in assets, really non-current assets like property, plant or equipment, thus reflecting all changes in the cash position for the company. Third section is financial activities, that is to say, capital and long-term loan received and repayment of same. There are two methods of calculating cash flow statements. Indirect method, when the indirect method of presenting a company's cash flow from operating activity is used, this section of CFS will begin with corporation's net income. The net income then followed by the adjustments needed to convert the accrual accounting net income into cash flows from operating activities. Few typical adjustments are adding back depreciation expenses, adding back accounts receivable, decrease in account receivable, deducting the increase in inventory, deducting the decrease in accounts payable, adding the increase in accrued expenses and accounts payable. In the direct method, cash amount received and paid by the corporations are listed directly. Few examples are cash from customers, cash paid to creditors, cash paid to employees, etc. A typical cash flow statement is shown here. As you know, cash flow from operations, cash flow from investments, cash flow from finance are the three sections shown here. Dear students, now let's look at some questions. Some information extracted from the balance sheet for year 1 and 2 are given here. What is typed in red is the answer. See stock. There is an increase of stock by 20. That is to say the company has financed it. Therefore, it's 20 outflow. In the case of debtors, there is an increase of 35. That is also have been financed by the company. Therefore, it is an outflow. Trade creditors, there is an increase. That is to say they have financed us. So the difference is 20. Other creditors also 55 to 75, there is an increase. This is an inflow of finance. Therefore, the net flow is 15, which is outflow. Answer is B. Okay, the next question. Summarized cash book is given and they want us to calculate cash flow from operating activities. If you look at the answer, cash received from debtors 9 million, Cash paid to creditors 7.8 million. Cash paid for various wages and salaries 600. Other cash expenses 300. Income tax paid is 150, giving a net operating results of 150. If you look at the question, you will see a few entries are deliberately omitted into the answer. Of course, these are also cash flows, but why it is not shown is the question say from operating activities. What is shown here in red are from finance activities. What is shown in blue here are investment activities. This question is about direct method. Next question. From the following profit and loss account of S Limited, calculate the net cash flow from operating activities. A normal profit and loss account, which includes cash transaction as well as non-cash transactions, which need to be adjusted. As you see, depreciation, goodwill written off, provision for bad debts are added. Those are non-cash expenses. As you would note, loss on sale of plant, loss of sale of machinery are added, and similarly profit on sale of building, profit on sale of furniture are deducted. Hope the students will understand sales proceeds of these assets are inflow of cash and will be shown in some other parts of the cash flow statement, not in the operating activity. Other details are accrual expenses, non-cash again, therefore those are either added or deducted. If we move on to the next question, we are required to calculate the net cash flow from investing activities. Details of two non-current assets are given here, namely furniture and machinery. As additional information, furniture costing 100,000 with an accumulated depreciation of 20 was sold for 70. Machinery costing 100 with accumulated depreciation of 30 sold for 80. Here, the sale proceeds of furniture and machinery are shown as inflow. If you look at the question, you will see there is a movement of the fixed assets indicating there are some purchases as well. Furniture 1,800. After the sale of 100, it should have been 1,700, but presently it is 1,950. Obviously, there is a new purchase of 250. Machinery of 1,200. After selling 100, it will be 1,100. Move to 1,400, giving a new purchase of 300. Total outflow of 550 as against inflow of 150 gives a net flow negative 400. Okay, in the next question, you are required to calculate cash flow from financing activities. Details of capital and long-term debentures and bank loan are given here. Further information, the company issued 5,000 bonus shares during 2019-20 to shareholders at face value. The interest on debentures paid is given, interest on bank loan is given, dividend paid during the year is given. As you see, in the 10% debenture, there is an upward movement of 200, that is to say there is a new issue. In the case of 12% debenture, there is a downward to indicate there is a redemption of 200. See the last line. The new bank loan received is inflow and interest and dividend are outflows, leaving a net flow of 455. Now let's look at the final question. Where L Limited's balance sheet for 2 accounting periods are given here. Under additional information, 1. During the year, fixed assets with a net book value of 30,000 was sold for 37,000 and a fixed asset costing 300,000 were purchased. So there is an inflow of 37,500 and outflow of 300,000. Since these are investment activities, cannot be shown under operating activities. Therefore, it is shown as capital expenditure. Information number 2 is issue of bonus shares. That doesn't involve cash, therefore this is not shown anywhere, but it explains the difference in the share capital in the balance sheet. Share premium of 150 have been used for this purpose. Information 3 is speaking of an issue of debentures, but the amount is not given. But if you look at the balance sheet, the amount has moved to 195 from 90. Obviously, the issued amount is 105. Now look at the answer. The difference between profit and loss account is current year's profit or loss. Depreciation is added. Look at the calculation. For the fixed assets of 900, a new purchase of 300 removed and the one sold is added, leaving a balance of 630. When you minus it with 720, the difference of 90 being depreciation. Profit on disposal is removed from here as the full amount of 37,500 shown as sale proceeds of fixed assets. Next, if you look at the general reserve of 7,500, the proposed dividends of 37,500, these are provisions, no cash involved. Therefore, it is added. Debenture interest of 19.5, interim dividend of 15 were added here but deducted again from the other side of the cash flow statement. If you look at working capital details below, reduction of stock is inflow, reduction of debtors inflow, increase in creditors inflow are shown here, leaving an operative activity of net cash flow 199,500, which is now carried forward to the other section of cash flow statement. All the details in this answer we have already discussed except the proposed dividend of 30,000. If you see the question in the opening balance sheet, there is a proposed dividend of 30,000 from the previous year, which is now paid and shown as outflow. As you see, there is a net negative flow of cash 22,500, which is explained how the opening cash balance of 49,500 became 27,000 now. Hope things are clear. More and more exercise like this will be very helpful to understand this subject better. Dear students, as you all know, these classes are provided to you by our YouTube channel, SL Account School. We kindly request you to subscribe, share, like, and promote it among others, those who are interested. Thank you very much.